The smooth breakfast is in full swing this hump of the week, Wednesday morning, 32 minutes past 6 a.m. 18th day in the month of June 2025. You are listening to the smoothest dial on Lagos Radio, Smooth 98.1. We love music and we definitely love life as well. My name is Ayokunmi, and it's time to take a walk into the world of business. This is a Business Express brought to you by IntoSwitch on a Wednesday morning, 15 minutes of business news and information that you need to get two plus two to make four, and so on and so forth. And this morning, we're going to be talking about Nigeria's inflationary numbers. Yes, they have slowed down once again for the month of May. And joining me to take a look at this and give us some insight into what's going on, my guest this morning is Funmilayo Oladejo. She is the team lead at P.A.C Research. Very good morning to you, Funmilayo. Great
Good
to have you on
morning.
the show.
Yeah. Thank you for having me.
Absolute pleasure. Okay, so looking at the topic of conversation here, before I jump into that, for you listening out there, you can join us on the show. Send your thoughts into us, your messages. We'd love to hear from you. Hey, we'd love to hear from you each and every single day. The WhatsApp number is 0809 444 0981. You can also leave a comment on the live stream on YouTube. We're at Smooth 981 FM Lagos. Smooth 981 FM Lagos. All right, back into the conversation here. What do you make of the 22.97% headline inflation figure in May? That's compared to 23.71% that we saw in April.
Thank you very much. We've seen a 74 basis point decline in the May figure inflation compared to what we saw in April. Well, I would say that that's a positive development, at least two consecutive decline, right? It shows
Mm,
that inflation is not rising as fast as it was earlier in the year. And when we compare this to the 23.71% in April, we can see that there is a clear trend of easing price pressure. While inflation still seems high and many households are still struggling with cost of goods and services, this slowdown indicates that some of the reforms by the Central Bank Monetary Policy Committee, such as the tightening of the MPR rate to 27.5%, are beginning to have
mm,
a stabilizing effect on the economy. And it's a sign that we are moving in the right direction, right? Though the progress is still kind of fragile.
mm. Still kind of fragile. So, can we say that even though we've seen a deceleration 2 months in a row, can we say that it is probably something that isn't going to be long term? It could be long term. Is there any way we can tell right now where the wind is going to blow? Let's say for when the June numbers come.
So I would speak to the factors that contributed to this decline so far and what we might
Okay.
expect to see going forward. So several factors have contributed to this decline that we have been seeing. And one of the key triggers is the relative stability we've seen in the exchange rate, especially
Mm,
after the Naira strengthened following a series of market reforms and improved inflows, which has helped reduce cost of imported goods, right? And in addition to that, the central bank tight monetary policy stance, particularly the increase in the MPR to 27.5%, has helped reduce liquidity in the system, thereby slowing down demand-driven inflation. And when we look at on the supply side, right, improved local food productions and in some regions and better logistics due to the dry season may have also contributed to that. And finally, the base effect factor is also part of it, considering the fact that price rose sharply during the same period last year. When we compare
okay.
that this period, the increase during this period is smaller in comparison, and this stemmed from the rebased exercise conducted by the NBS in January.
Okay, interesting thoughts there. I mean, we talk about all these numbers on a regular basis. Uh, this percent, that percent, it's accelerated, it decelerated, and so on and so forth. But the thing is, are people really feeling this deceleration in prices? I mean, there have been a lot of reports that food prices have been slowing down here and there, but has there really been a significant, feeling of this deceleration by the average Nigerian?
All right, that's a very good question to ask because even though inflation is slowing in percentage terms, right?
Mm,
Most Nigerians are not yet feeling the impact because, right, prices are still kind of going up, just not as fast as they used to be. For example, for someone that earn a fixed income or is already struggling to make an end meet, slower increases in prices doesn't necessarily translate to relief, right? For example, food inflation, which affects virtually everyone, is still a major problem. Where there have been
Mm,
improvements in prices, of course, there have been some improvements in prices of selected items in local markets, right? Some basic staples like rice, yam, tomatoes, they are still kind of expensive. So the average household still feels the burden. So for these celebrations to truly, make a difference, we need a more sustained and a broad-based drop in prices, particularly in food and transportation. So to the question, Nigerians are not yet feeling the impact until we see a broad-based decline in prices
mm. And
of
I mean,
needed.
looking at all the policies that have been put in place that seem to be working to bring down the inflation rate. I mean, is it still the same policies that will keep on pushing the rate down, or is there more that needs to be done in order to make push the rates down faster so we can see quicker improvement in the numbers and also in the lives of the average Nigerian?
Yes, so some of these policies that have been put in place, yes, I would say the government needs to double down on it as well. We need to be aggressive
Okay.
reforms as well. These policies, even the World Bank recognize that it has yield positive results so far. And at the same time, there will have to be a balance so that the economy will not tilt. For example, interest rate is already high, already at 27.5, which is affecting business, crippling some business to take loans to expand businesses. So there will be a balance. The current reforms will still be effective to achieve this goal so far, just that the government just needs to be a little bit aggressive with it.
Okay, all right. Interesting thoughts there. Okay, now let's look at things from an investment perspective here. The monetary policy rate is 27.5%, while the consumer price index, the CPI for May, is 22.97%. So that's a positive real return of 4.53%. What exactly is the significance of that here?
So this signals a return to inflation beating yields on Naira assets, right? So it's significant for both the investors and the economy. For investors, it means they are no longer losing value to inflation when they put their money in fixed income assets. It also
Okay.
encourages savings and long-term investment in the local currency. While for the economy, it helps to attract foreign portfolio inflows, which can boost foreign exchange supply and support the Naira. At the same time, it's reinforced the credibility of the central bank monetary policy, showing that the efforts to bring inflation under control are working. So it's significant for both investors and the economy.
Okay. Let me just talk about the Monetary Policy Committee here and maybe put you on the spot a little bit on this one. Now, we know that last month the committee held rates. I think that was the second consecutive month that rates would actually have been held.
Yes.
And now, with the continued deceleration in inflation, uh, do you see any major moves being made at the next meeting? I know you don't have a crystal ball or you see the future or anything, but looking at what has been done in the last two meetings and where we are now, I mean, what would you say is a possibility in the next meeting?
Okay, so although we've seen inflation, slow down for 2 consecutive months, right? And this is still significantly above the central bank long-term inflation target. So given the current inflation level and the fragile state of the macroeconomic stability, I think it's unlikely that the MPC will cut rates just yet. Well, because the last meeting, them holding the rates was a cautious move, which is part of to assess the impact of the previous hike so far. And going forward, I think the committee may maintain this cautious stance until they see more evidence of consistent disinflation and currency stability. So a rate cut or a dovish pivot will require strong confidence that inflation is sustainably under control, which we are not quite at it yet.
Well, slow and steady. The important thing actually to keep those numbers going down. Talking about the numbers going down, the federal government has a 15% inflation target for 2025. Is there any chance they can meet that number this year. I mean, we're already at halfway point in the year, 6 months left in 2025. Can they meet that 15%?
Well, even the World Bank or IMF put the average inflation rate for the year at 22% thereabout. So I would say meeting the 15% inflation by the end of the year might be a bit difficult, considering
Mm,
that, okay, currently inflation is still close to 23%, right? While the downward trend is, encouraging, reaching the 15% would require aggressive reforms and near perfect policy coordination across the monetary, the fiscal, and the structural fronts. And this will
mm,
include stabilizing fuel and energy prices, boosting food production and distribution, and improving security in farm producing communities, and while also maintaining exchange rate stability. So I would say that it's more realistic to view the 15% as a medium-term goal. It will
mm,
only be achievable in 2025 if reforms are sustained and external shocks are avoided. And if you look at what's currently going on, the global tension as well, everything is there. So there's still some uncertainty out there.
mm. Well, I mean, from what you said, it seems like there's so much that we need to go into making that 15% a reality. I mean, it's good to have big aspirations, but I don't know. I don't know. Looking at where we are right now, what is in the mix? I don't know.
Yeah.
Anyways, as we get to the end point of the show this morning, I don't need to ask this for all the investors out there. I just need to get some advice from you. I mean, looking at investment possibilities, is there a portfolio mix in Nigeria right now that you can say will be able to beat inflation?
Okay, so I would say that diversification of investments and with careful planning, portfolio investors can construct their portfolio in a way that you know, a bit outpace inflation. A good mix would be including high yield fixed income instruments like FGN bond, treasury bills, and corporate bonds. And also,
Okay.
investors can also consider dividend paying stocks in sectors with strong fundamentals like telecommunications, the FMCGs. At the same time, the real estate and infrastructure funds we are accessible also offer longer term protection against inflation as well. So for investor with a higher risk tolerance, a mix of naira and dollar denominated asset can offer a diversification and inflation protection. So the key thing is to stay informed and just adjust portfolio as the market condition evolve.
Mm. All right. Thank you for that very, very, very important piece of advice there, Funmilayo. It's been quite a great, great morning with you on the show. I've been talking to Funmilayo Oladejo. She is the team lead at PAC Research. It's been a pleasure having you on Business Express.
Thank you very much.
All right. Have a great Wednesday and a great rest of your week.
And
And
you
Lagos,
too.
thank you so much for being a part of the show this morning. This has been Business Express brought to you by IntoSwitch. Keep it tuned. The Smooth Breakfast will continue. It's going to be taking a look at the papers at 7:30 on Freshly Pressed. But before then, more great music to liven up your Wednesday morning.